Welcome back. Well, Chalet Hotels is the next management on the show. It reported what was a good set of numbers and what was a challenging quarter. So Q1 was impacted by, for example, elections as well as heat wave. To discuss this and more, we have Sanjay Sethi, who's the MD and CEO of Chalet Hotels, who joins in now. Mr. Sethi, thank you very much for joining in. Well, you've done well this quarter. Revenue growth of around 16-odd%. EBITDA is up around 27% as well. Just give us a sense in terms of how the ARR or the average revenue per room look like, as well as the occupancy.
Good afternoon, Ekta. It's a pleasure being back on CNBC. Look, as you mentioned, it was a quarter which was challenged on account of a massive election process in India. And, the impact impacted the industry by almost about 6 out of the 12 weeks in the quarter. And Q1 is never really the best quarter in any case. Despite that, on a same-store basis, we've delivered 9% growth. And overall basis, we delivered about 15.5% growth. And also managed to increase EBITDA by 100% if you take away from last year the one-off tax benefit that came in Q1 of 24. So overall, satisfied with what we did in Q1. The true story for hospitality really is after Q2, because H2 tends to be a much stronger quarter. But the industry dynamics seem continue to be extremely positive, with tailwinds largely on the back of the positive arbitrage between demand and supply, and which is expected to continue for the next 3 or 4 years. On the average room rate and occupancy or RevPAR front, the strategy was to keep the rooms occupied. So we focused more on strategy in on occupancy in most of the hotels. Because MICE was slow, we've had to rely on independent travelers. We've still had 4% RevPAR growth on a same-store basis. Overall, if you add the new inventory to the portfolio, then the RevPAR growth is around 2%.
Okay. Mr. Sethi, you said you did well in a time when the industry saw some weakness in Q1. Despite that, margins have come in closer to 39% this quarter. Is this something which would be sustainable, or you'll be able to improve? Because, as you said, second half would be better than the first half. So will margins improve from here on?
Well, we expect margins to improve because Q1 is the weakest quarter in any case. H2 will throw up some very positive margins. The numbers that you have on the screen just now are different than the numbers that I have, because we've delivered 40% EBITDA margin on a segment of hospitality. So you may need to change that to
That is correction. The EBIT margin, Mr. Sethi.
Oh, EBIT,
it's not
sorry.
the EBITDA margin.
I'm sorry, my fault on that one. Yes,
right.
You're right. The EBIT margin was that much. But EBITDA will continue to grow. Q2 will be better than Q1. Q3 and Q4 will be significantly better than Q1 and Q2.
Okay. What did you end FY24 with in terms of the number of keys? And you do have a target of around over 3,090 keys odd in FY25. Where does that target stand now in terms of achieving it? And are you on track for FY26 as well as FY27 in terms of the number of key additions?
Yes, in fact, very much on target. We've closed this quarter with 3,052 rooms. We expect to add another 200 odd rooms during this financial year. So we'll move up to roughly around 3,250 rooms. In addition to that, we have a pipeline of 800 rooms between, rather 662 rooms between the 2 hotels that we are building as Greenfield. One in Delhi, which is going to be a Taj. The second in Airoli, Mumbai, which is going to be a Hyatt Regency. And so with that, we should hit roughly around 4,000 rooms. We've today also shared with the market the fact that we are closing a deal in Goa. It's a beachfront property in Goa, positioned at the luxury end. And what is Greenfield? So it'll take 3 years to build out. And we expect to deliver roughly around 170 rooms on this beautiful location, which should deliver path-breaking guest experiences.
Okay, you talk about Goa. Usually it is a scenic travel that we all talk about.
That does really sound tempting.
Anything to get out of rains right now, right? And the puddles. But Mr. Sethi, I just want to understand, what will growth be led by from here on? Will it be addition of new properties, or will it be higher occupancies at existing properties? Because I was reading a news piece which suggested that globally airlines are cutting fares because now they don't expect the same amount of demand that they saw in last 4 years. Is this something that will happen in India as well? Is that an expectation? And what does that do to the hospitality industry?
India lets to be in a part of a cycle which is early upside cycle that we are witnessing now, because the supply side will only really kick in over the next 4 years. Demand continues to outpace supply, and therefore we expect both occupancies and rates to grow quite aggressively going forward. In addition to that, we've got greenfield assets or additional assets that we are adding to the portfolio. So for Chalet, I think it's going to be all about, on one side, sweating the existing assets, and on the second side, additional capacity growth.
Okay, you do have some properties which are coming up. For example, the Khandala Dukes property as well as the Westin Hyderabad. Give us a sense in terms of when we can see it starting to reflect in terms of your numbers as well as maybe profitability.
We've already commissioned the Hyderabad hotel last year. Dukes was acquired and went in for major renovation, repositioning and expansion. We are likely to open out the first phase of a small inventory of 37 rooms with new public areas before the long weekend of 15th of August. But the whole property with 145 odd rooms will be commissioned sometime in December. And it will be repositioned to a very different level than Dukes was earlier. The experience will be quite stunning in that property. In addition to that, we're adding about 125 to 130 rooms this year in our Bangalore property. So these will be the two additions, and then subsequent years we'll add more rooms.
Okay, I think Ekta already wants to go on a vacation after hearing all your plans and generally hearing about vacation ideas. Mr. Sethi, let's talk about your rental business. When does that become at 25% versus 9% of revenues that you have right now? And with that addition, will it be margin accretive? How does the margin picture work here?
So, typically, office rentals throw up margins of about 80 to 90%. So it will be margin accretive, to answer that part of the question. We have currently 2.4 million square foot of office space ready. Half of that is already leased out. We expect to get to at least 90% leasing by end of this year. And at that time, this 2.4 million square feet should, on annualized basis, throw up about 280 crores of EBITDA and be value accretive for the portfolio. We've got another 800,000 square feet or 900,000 square feet, which we're in early stages of development of a second tower in Mumbai. When that gets completed, we'll hit about 3.3 million square foot of office space. And by the time that gets completed, we expect the office portfolio to throw up roughly around 400 plus crores of EBITDA and have a significant contribution to the company's EBITDA margins. But hotels also growing. So at the end of it, we expect office portfolio to throw up about 25% of the total margins.
Okay, all right. Well, we look forward to all of these properties. Mr. Sethi, thank you very much for joining in and speaking with us. So that is Chalet Hotels talking about the quarter gone by, as well as their capex, which they have lined up. Piramal Pharma just came out with its numbers. The revenue is coming at around 1,951 odd crores. And the margins have come in, I think, at around 10 odd percent, which is an improvement on a Q1Q on a year-on-year basis, which compares to 7.6%, but versus 20.8% last quarter. So that's the reason you're seeing the stock dip into the red. Q1Q, the performance has been weak, and I think the street wanted to see consistency in terms of the margins, though they did say that it is lumpy. Q4 is the best, but from 20.8 you come down to around 10 odd percent, and that's what the street probably doesn't like at this point.
Okay, so that's about Pirimal Pharma, but we have to get into a break. But a special announcement for all our viewers about an exceptional evening where we are honoring the heroes of India's economy, a prestigious ceremony where we are celebrating the SME champions who are building our nation brick by brick. The $5 trillion economy on the horizon. We must acknowledge the heroes, our small and medium enterprises. India's one of the coveted SME Awards platforms is here to recognize, honor and celebrate the builders of India's economy. HSBC presents CNBC-TV18 SME Champion Awards, which is all set to finally announce the winners today, 5:30 p.m. onwards.